FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz at 612-19. Hey, remember, we are running our contest. I'm upping the rewards because I just decided it's not worth your time for a pre-1965 silver quarter to win. I mean, that is literally, it's $2.60-something cents. It's just not worth it. So let's up our game here, and we'll just say that you will receive 25 pre-1965 quarters, 25-cent pieces, and all you have to do is guess the price of Bitcoin right around my birthday, which is on July 20th. And if you get closest, but you have to beat me, I am saying Bitcoin will be at 66.50 on July 20th. So if you get closer, you win. And then the next 5 people will all get a pre-1965 25-cent piece. All you got to do is email me your prediction to kl@kerrylutz.com. And if it's a tie, well, we'll worry about it then. So try not to do a round number like I did. 66.50. If you get closer than I do, then you win. Anyway, John. So John Rubino's with us now, and hey, John, it's I'll tell you, like in politics now is not a young man's game, is it?
Hey, Kerry. Yeah, it's so funny to watch the Democrats, which, the probably the defining feature of the Democrat Party now is it's got a lot of new blood in there. It's got a lot of women, a lot of people of color, a lot of different sexual orientations and everything. And their 2 front runners, though, are extremely old white guys.
Yeah.
So you gotta, I'm sure the Democrat base must have mixed feelings right now about how this is going. But another interesting thing about it is that Bernie Sanders and Joe Biden represent the 2 branches of the party. And those 2 branches are kind of at war right now. You got the Clinton wing and Obama, which is kind of sort of centrist. They came to the conclusion that the best way to win elections is to appeal to the middle to get that 51%. So you can elect a president. But you do that by adopting kind of middle of the road policies, obviously by definition, like Bill Clinton did so successfully. And that just appalls the left wing of the party, which is becoming more and more powerful, as represented by Bernie Sanders, who's an avowed socialist. So it's not clear how these guys work it out, because one group is going to be really reluctant to vote for the other group. The Biden wing of the party now doesn't want to vote for somebody who says they're a socialist. They're opposed to socialism. But the Bernie Sanders wing of the party does not want to vote for a centrist, because what's the point? If you're just going to get Republican light policies, why bother getting out of bed in the morning? And the other thing about both those guys is they both have some big flaws. There's a 1988 video of Bernie. This is 1988, not 1945 or anything. This is of Bernie Sanders coming back from a visit to the Soviet Union and talking about how great they are. How beautiful their subways are and how the trains were on. It's amazing for that to happen. And that was 2 years before the Soviet Union collapsed. And after, everybody already knew it was a monstrous totalitarian dictatorship. So that's something that if in a presidential campaign, if you're the Republicans, you run that video 24/7, right?
Hey,
but
it's a great place.
Biden, Biden, meanwhile, has all the baggage of the Bill Clinton, Hillary Clinton, Barack Obama era, in which he's against, for instance, federal funding of abortion, which he had to flip-flop on just now. And
I thought he was for it now.
Yeah, he's totally for it. And
he always was.
Yeah. And he was in favor of welfare reform, which, as it was created, the left hates, and criminal justice reform, which put a lot of people of color in prison. And so he's having to backtrack on all these signature policies and there's not a whole lot left at the end of that. So it's not clear how it ends up for him. Anyhow, interesting process. Meanwhile, the Republicans are just going to chug right along, nominate Trump again.
Yeah.
And he's just going to, tweet throughout the campaign just like he did last time. So it's really an interesting thing shaping up, and it's not at all clear how it plays out, because it's completely possible that we end up with somebody from the left in the Democrat Party and who gives us modern monetary theory and just massive inflationary policies. And that's, you got to have mixed feelings about that as a gold bug, because that's the quickest way to make a fortune with your gold and silver. But it's a scary thing in every other aspect.
Hey, all of them are scary. And, to the point where Trump is totally unscary when compared to them. They're all like giving everything away. There's like no reason to, if any of them get elected, to ever have to work another day in your life, because you'll get everything: free college, free this, free that, free Medicare for all. And it's, look, to me, they're saying their constituents are total morons and have no clue about how the world really works. And maybe they're right. Maybe they know their constituents, their group better than you or I know them, John. Maybe people really believe that you can have free everything and never have to work, and that everything will work out fine.
Well, there's always a political market for free stuff. It's just each wing or each part of the spectrum defines free stuff differently. The Republicans do it via tax cuts. In other words, keep all your income, and a giant military for people who believe that that's a really important thing to have. A military industrial empire that rules the world. Well, we'll give you that. You don't have to pay any more for it, because we'll actually cut your taxes while we assert our authority all over the world. That's the Republican version of stuff.
Yeah.
And Democrats are more direct. They're just, we'll just pay for your healthcare and your housing and your college tuition and whatever else you can think of. Come back to us and let us know, and we'll try and find a way to pay for that too. In either case, it fails miserably, because there is no free lunch. Like you said, you can't live beyond your means forever, whether you're an individual or a country, without it ending up the same way, with you being bankrupt. And that's what we're headed for. And this election, I guess, kind of ratifies that, because if Trump wins, we get $1 trillion deficits forever to pay for tax cuts and the military. And if Bernie Sanders wins, we get multi-trillion-dollar deficits forever to pay for everything. And if Joe Biden wins, we get some split the middle kind of policy of those two extremes, and which will also have to cost $1 trillion a year in deficit spending to finance. So, it's pretty much baked in the cake that we are just going to borrow and borrow and borrow until borrowing doesn't work anymore.
Yeah, and then borrow some more.
Well, then we'll print, we will just say, this whole debt thing, we're just going to have a jubilee. It's even in the Bible. So we're just going to pay off all your debts, and we're just going to create as much new money as the government needs to run, and then everything will be fine.
It's kind of has to happen.
Really the end game, the rhetorical end game. We kind of already do that, but they'll actually have a name for it later, and it'll be the official policy.
Yeah, I am inclined to agree with you, because what choice is there in the final analysis, right? Is there any choice?
Well, when you've borrowed too much money, your choices narrow down to just really bad outcomes, right? Mm-hmm. So we can just collapse under the weight of all this debt and have a 1930-style depression and get rid of the debt that way through default. But nobody in charge wants to preside over that. So they're all trying to delay the inevitable. And by the way, there will be a time when it doesn't work anymore. You probably saw what happened in Europe last week, where Mario Draghi, the head of the ECB, did one of his whatever it takes speeches, which worked beautifully in 2012 or 2013 or whenever he did it the first time. He came out and said, we'll do whatever it takes, and I guarantee it'll be enough. And the markets just rocketed after that, because they had the Fed or the ECB at their backs. Mm-hmm. Well, he made a speech like that again, where he said, we'll raise it, or we'll cut interest rates if we need to, and we'll ramp up QE if we need to. And the European markets responded with either a yawn or by going in the opposite direction, depending on which market. Only German interest rates went down. on that announcement. Everybody else's interest rates went up and the euro went up. Normally, your currency goes down when you promise massive, easy money indefinitely into the future, but the euro went up. Mm-hmm. So it could be that, and a lot of the press reports at the time pointed out that how is he going to cut interest rates if the overnight rate is already negative 0.4% or whatever it is right now? It's some negative number. And how do you cut interest rates dramatically from there? So there's skepticism now about central banks being able to lower interest rates forever into deeply negative territory. And it's reflected in the markets. And see, that's a kind of a glimpse of our future where everybody's going to end up there as the central banks lower rates again in the next recession. We're all going to be looking at what's happening and saying, well, are we going to have negative 10% interest rates? What does this mean? It can't be good, and
even that, there's a limit to how negative interest rates can go, where they will have the intended effect of getting people to spend more. And this is the Keynesian thing. Negative interest rates, purely Keynesian, increased demand because you get penalized for savings. And this is a horrible policy. All of these policies are horrible. Even when you have negative real interest rates, which arguably we've had for a while, negative real interest rates, you're still getting a rate on your investment, but it's not keeping up with inflation. We've had that forever, right?
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Yeah. The lower interest rates go, the more it helps borrowers who are paying back their loans at extremely low interest rates, and in some cases negative interest rates. And it hurts savers because you can't earn anything on your savings. Keynesian economics says that's fine because savings is bad. Savings takes money out of circulation. If you're saving it, you aren't spending it, and spending it is what you need to be doing. Even if you have to borrow money to spend it, spending is the important thing. So from their point of view, lower interest rates, no matter how low they go, are a good thing. And higher interest rates are a bad thing because it incents savers to save more. Now, the Fed is also talking about this stuff. Jerome Powell, the chairman of the Federal Reserve Board, came out in the last couple of weeks and talked about how he will lower interest rates dramatically if he needs to, and that they might explore what he called the effective lower bound, which is, that's not zero. It's the number that you can't go below before the cure becomes worse than the disease. In other words, when the problems get bigger than the benefits of that interest rate. And we don't know what that rate is. It used to be thought of as zero. They used to talk about the zero bound. And then Europe and Japan went below zero and they didn't blow up. So now the theorists are speculating about what the real lower bound is. In other words, where you can't go below.
They want to find out. They want to find out too.
Yeah. We've got our central bank talking about exploring the effective lower bound of interest rates. Harry, did you ever think you'd live long enough to see this?
I can't say I ever thought about it, but it certainly doesn't surprise me because desperate people do desperate things. We know that, and that's a pure act of desperation. It really is. It's given human nature with the amount of money that we're borrowing, it's not a surprise that we're doing really extreme stuff to try to get out of it. But the stuff that we're doing, or the stuff that we're intending to do next time around, apparently, is just amazing from an economic theory standpoint. That we're gonna push interest rates down in a search for the point where they can't go any lower.
is just astounding. And did you see what happened with mortgage rates just this last week?
Oh,
they dropped, and home refinancings are soaring, and home sales are going through the roof. And I've got a friend here who's a real estate appraiser, and he says he's never seen this before. It's just crazier than he used to work in California, and this is crazier than California ever got in his 30-year career as an appraiser. So from current mortgage rates, at least in the U.S., you can lower rates and generate more borrowing. That's what's happening right now.
Isn't that a wonderful thing? Isn't that great? It's just so good.
But I mean, they still do have that tool. So as interest rates drop in the U.S., we're seeing an impact on the system. In other words, we're taking on more debt if interest rates go down. So we aren't at the effective lower bound yet, but I think we'll have to dig into it here pretty soon. When recession comes, normally the Fed cuts the Fed funds rate by about 5 percentage points. And if we're at 2 and change right now, that 5 percentage point cut takes us to negative 2%.
2.14 we were at when I looked yesterday. Let me just give you a taste of mortgage rates. This site, Bankrate, only updates them every week. There should be one for today, but there isn't. But as of June 5th, which was last Wednesday, the 30-year fixed rate, all things being equal, is 4.06%. The 30-year jumbo, and jumbos are a little riskier, only because there's more money being risked, not necessarily that the default rates are higher, but the loan is larger, is 4.10%. So that's enough to stimulate even the most moribund real estate. They're probably hopping in Detroit now. People just can't get enough of those, right? I mean, they just can't get enough of those, whatever you call them in Detroit. There, the real estate sells for more without a house on it than it does with a house. That's how bad it is there. But I'm sure the market's booming, right?
Who knows? But it seems like it is in most places.
Yes.
And 4% is not the all-time low for U.S. mortgages.
No,
we were into the threes.
346 or so.
Yeah.
But still, we've been at up to 5.5, John. Like 3-4 months ago, we were at 5.5%.
Oh, yeah.
And
I remember not all that long ago being really excited to get a 6% mortgage. So this is historically low, but apparently it's going lower. That's the important thing, that we're going to see maybe 3% or 2.875% mortgages here in this coming cycle, in the down cycle.
I think you're correct.
So, be prepared to refinance, I guess.
Hey, things are cooking in Florida here anyway. I mean, there's construction all over the place. It's almost like looking at downtown Beijing with all the cranes and everything. So this will only up that. And nobody expected this, John. Experts surprised by lowering interest rates, right? I mean, you can write the headlines because the experts never know anything. They never get anything right.
Well, because we're in the realm of experimentation now. So the models don't work anymore. The old models. If you're a hedge fund manager and you've got a black box trading algorithm, it's probably not working very well lately or over the last 5 or so years. That's why hedge funds are dying at the rate that they're dying.
Yeah, and on private equity, a lot of leveraged buyouts. And if you ever watch that show Billions on Showtime, it's all about this guy Bobby Axelrod. He is the hedge fund mover and shaker, and he just throws around billions of dollars the way other people throw around a 25-cent piece. It's just hysterical to watch. Really funny. So
that's that world. And
you got it. That's it.
You would think that with stocks at near record highs, bonds at near record highs, that there would be a lot of rich people out there who guessed right about all of this and who rode those asset classes to absolutely amazing fortunes. And there are a lot of extremely rich people out there. But there are a lot of people who are sincerely trying to manage money out there who just can't figure out what to do, because the old valuation measures that used to tell you whether stocks were cheap or bonds were cheap, and which stocks were the best values relative to other stocks, don't so much work anymore. When you've got IPOs coming out that do what the recent batch of IPOs have done. It's incomprehensible because some of these big name companies have gone public, like Uber, and then tanked. And others, like a company called Beyond Meat. I don't know if you're watching.
Yeah, I saw that. Yeah, I don't know what they do. I know nothing about them, but they seem to be doing amazing things.
Well, they make non-meat meat. In other words, vegetable-based hamburger patties and things that are selling briskly, and it's a hot new market. And so they went public and just soared. They I think quadrupled or something like that after they went public, which is a really big move. And now they're tanking because everybody who covers them is saying, I got to put a seller on this. It's just gone up way too much. And so now it's tanking again. And how do you play that if you're a money manager? The answer is you can't really. And there's a lot of things out there like that make life hard for professional investors. See, this isn't, you would think this is a great world for professional investors if stocks and bonds are both going up, but it's actually not because it's incomprehensible. When you've got all markets being manipulated upward, then if you're trying to beat any of those markets, you're almost guaranteed to fail because there is no system for beating manipulated markets because other than leverage, if you buy the manipulated markets with borrowed money, you do really well until you don't, until the markets stop being manipulated and they crash and you lose everything. And that. So you have this choice of take an insane chance and make money this year at the risk of ending your career next year, or underperform at the risk of ending your career in a couple of years when all your clients pull out their money. And that's what a lot of these guys are looking at. So you have to kind of sympathize with even professional money managers who you would think would be favored by this world because they're really not.
Yep. It's a very difficult environment for anybody to make a buck in. There is hope. Charles Nenner, who is a brilliant forecaster, who's been spot on a lot of times. He's past few years, not as much as he was in the past, but when I interviewed him a year and a half ago, he said buy the VIX. It was at 11. It hit 51 a week and a half later and quickly dropped back. But the VIX is a rapid fire trade. You have to get in and out really quickly. You can't walk away and go to lunch if you're in the VIX. And he said gold 2,500. He said the stock market's going to have a major decline because the economy just isn't going to be as good as everyone thinks. And who knows, he might be right. But it's certainly worth keeping your eye on and making sure that you protected yourself, not putting all your eggs in one basket and all those great cliches. Anyway, we got to go. Don't forget the contest because you'll win a bunch of pre-1965 quarters. If you can come closer than me to the price of Bitcoin, my guess is 66.50 for July 20th. That's the cutoff date. We're looking at a little bit more than a month. Email us your answers, your predictions, KL@KerryLutz.com. Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Don't forget, go over to John's site, dollarcollapse.com. He's taken a little bit of a hiatus, but I have a feeling his writing is going to be back, more prolific than ever. John, we will catch up with you next week.
Thanks, Kerry. Talk to you then.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.